Hello and welcome back to the channel. In this edition, we'll be reviewing the three rating agencies which are listed in India. So we'll be doing a peer comparison of the three rating agencies, and we'll also be doing a parallel comparison between the two rating agencies which are listed in America and where they stand at in terms of the market cap and the some of the features which are there within the rating agencies within America. So I had done a video earlier on care rating, and I also hold some stake in care rating. And since I think about 2 years ago, I picked up some stake in care rating. And I really like the structure of the business. I like the way the business operates in terms of the how the revenue flows and how low capex it is. Um, the basic idea is that when I was really looking at the crisis, like 2008 crisis, and really going deep into it, and really trying to understand as to what caused the crisis, what caused the entire Western civilization on its knees, it was basically these rating agency companies. So Moody's and S&P had a big part to play in the 2008 crisis. They had rated the collateral obligations that were there from the housing tranches as AAA positive, and because of that, then banks were able to utilize that as an investment asset and continue making big profits on it. So basically, they were the ones who really went in deep and they said that yeah, this is a great product and this and that happened in 2008. So here what we see is 2008, the stock price for Moody's was close to around. So here, if you go back to 2008, and it started in September. So September, the stock price was 34 US dollars. So this would be retrospectively adjusted for all bonuses and bonus shares and splits and all those kind of things. And this would be the final after split share price. And what we see now is since then, the stock has gained close to 3,612%. So we are talking about an event which basically brought the Western civilization on its knees, and they got away by paying a small fees in terms of fine. And what few heads rolled, but nobody went to jail. And Moody's and as well as S&P. So if you look at S&P here, currently the share price is 524 US dollars per share. And in 2008, around 2008, the stock was sitting at close to 30 US dollar. And since then, it has gained a whopping 10,171%. So what I'm trying to say is that an event of such a big magnitude, an event which really brought the financial world absolutely to its knees, lots of job losses. It was a really hard time. People passing out of these big institutions, IIT and IIM, not getting jobs, or if they're getting jobs, their offer letters are being revoked. So it was a really tough time, and people who did pass out during those times, or people who got an offer letter from the US or anywhere, I think even in India, it had an associated impact. It had an impact of businesses slowing down and a lot of financial hardships in terms of job losses and those kind of things. So since then, the stock price of both S&P and Moody's have gone up. Now, I haven't started the pure comparison yet, but one very interesting point to note is that credit rating agencies have done really well in terms of Crisil making huge amounts of money for some of the marquee investors. We know about that story of Mr. Rakesh Jhunjhunwala selling selling some of his equity in Crisil at one point in time in 2000 and 2004, and buying a real estate property in Mumbai for 27 crore. And from that period, for the next 16 years, that 27 crore turned out to 760 crore for Crisil investment. But the real estate went up by 70 to 80 crore from the 27 crore that he had liquidated from the Crisil investment. So that is one of a folklore for anybody who's in the markets would know this story and would know how much wealth the credit rating agencies have made. Now, if you quickly look at the market cap of Crisil stands at 34,000 crore. Now, if you do a parallel check with where the market cap of the American credit rating agencies stand, obviously the American rating agencies have been established for a very long period of time, and the financial structure of America and the economy of America is way larger than what India is currently. But if we look at the runway for growth, if we look at where the financial industry stands, and from here on for the next 10 to 15 years where it will go, we are talking about what the economy number is. So the 3 trillion that was achieved in the 75 years of India's independence to double in shorter duration of times, and that's how compounding works. So Crisil is standing at 34,000 crore. In terms of Moody's stands at 7.4 lakh crore of market capitalization. S&P stands at 13 lakh 77,000 crore of market capitalization. So all the people who said that these are all run up and these are all at the peak of where they are, and or the only way from here is down. But if you do a comparison of where the market cap of American credit rating agencies stand and where Crisil, the highest market cap credit rating agencies which is listed, obviously there are a lot of other credit rating agencies, but I have brought the three for comparison. And if you look at care ratings is 1/10 the size of Crisil. So, and ICRA is double the size of care rating, approximately. So, even then, even now, 34,000 crore compared to a market cap of 13 lakh 77,000 crore for S&P and 7.4 lakh crore for Moody's. Please do let me know in the comment section what you think about this, and whether you hold the stock, what are some of the experiences that you've had while holding the stock, what are some of the nuances that you've learned about the business. But from where I see it, this business is a high cash flow business, and some of the companies that are listed, so Crisil obviously being the more established out of the three, it has ICICI was an early investor into Crisil, and 28% of Crisil's revenue was coming from credit rating. That is according to an article um, from Trade Brains in 2022. 28% of the revenue was from credit rating, but that contributed to profitability of over a 50%. So the credit rating part is a big profitable segment that they have, right? And what these three companies are turning out to be, they're also turning out to be in terms of consultancy and research papers and providing economic forecasts and those kind of things. So they're becoming a powerhouse of information related advisory. And Crisil's advisory has grown quite a lot. So for example, if we look at the this article, so we'll get to know how much it has grown by. So here they have mentioned that Crisil is the number one credit rating agency in India in terms of the size, the development path, and here you can see that Crisil is a globally diversified analytical company, and it operates in India, UK, USA, Poland, China, Hong Kong, and Argentina. So the other two credit rating agencies have a catch up to do, and they are care rating established one credit rating agency in China, sorry, in Nepal, and it's also getting into some of the African countries. But it has to really fight hard to get that market share from Crisil and get into some of the more developed economies. Now, because it's a high cash flow business, you would see that it also acquired businesses as it went along. So, for example, Crisil acquired 100% stake in Greenwich Associates in 2020. So this subsidiary provides high value data analytics and insight to the financial services industry. So this is one part. So what do you do with the cash that you generate? Either you give back as dividend. Now, if you look at within the pure comparison, what the dividend yield is, right? So the dividend yield is not that bad. It's 1%, 1.3, 1.4%. So the thing is, the cash that is generated is is not only plowed back to the business, but once you plow it back, where do you expand? So it's not like a factory, right? So that you have one factory today and you put a couple of more factories. Obviously you can hire more resources, hire more people, and do increase the volume of business, but you can also go on acquiring businesses. You can also go into newer geographies and expand your services, right? So it also, in terms of the pie, the financial industry pie, and we are talking about uh, um, a country where the credit offtake is yet to happen. In terms of, if you listen to a lot of share market experts, they would say that um, the offtake hasn't happened yet. So there are a couple of ways in participating in that offtake. So you can either be invested within NBFCs, so um, institutions which give loans for people buying non-banking financial institutions, and you can be invested in banks. But my preference is not to be in highly leveraged businesses. So if you look at the credit rating business, and you would look at the pledge percentage is zero. Also, the debt to equity, so very negligible debt to equity. So they have some debt on it on their book, but very negligible. And if you look at the free cash flow for 5 years, which is calculated as revenue minus operating cost plus taxes minus investment needed in operating capital. So if you look at that, they are generating decent amount of free cash flow as well. So this free cash flow, once the size swells, will be used in acquiring businesses to grow even faster. To the growth trajectory will not be linear, will not be just business related. Um, it'll be utilizing this cash to then go on to acquire businesses, which would have a multiplier effect on the revenue that is being generated for these credit rating companies. So that is one interesting bit. And even within this article that I was mentioning, so Crisil has an association with S&P Global, so that gives it an advantage in terms of going global and um, partnering with all the associates that S&P already has, and ICRA as well. ICRA is associated, as you can see, a Moody's investor service company. Only Care is one business which does not have any association with the Western counterparts, right? So also, there's a lot of talk about India's ratings. So India's credit rating is standing at triple B minus, and that now what is beginning to happen is China has developed their own credit ratings agency, which does its own sovereign rating. So obviously, the sovereign rating that China does for itself is way better than what Moody's and S&P are doing for the Chinese economy. The impact that it has is the loan that the country takes on the back of these ratings will be cheaper if the ratings are better. Similar to say, if you're giving a non-collateral loan, the interest rate will be higher compared to if you're giving a collateral loan. So the trust factor is defined by these ratings, and a lot of times these ratings are not given objectively in terms of um, what it really should be. So there's a huge debate about India's rating should be way better than what it already is. So here, if you look at the peer comparison, we talked about the market cap and how the market cap of Crisil, 34,000 crore, is is very low when we compare it to the American counterparts, where Moody's is sitting at 7.4 lakh crore and S&P sitting at 13 lakh 77,000 crore. And the other rating agencies also sitting at a very low market cap in terms of where they are, right? So in terms of the price to earnings, first we look at the price. I think the price, ICRA is sitting at 7253, Crisil at 4702, and Care rating at 1232. And in terms of the price to earnings, Care is currently the cheapest, and that is one thing. And ICRA and obviously Crisil is the highest at 51.4. So the market has placed a higher valuation on Crisil, but the profitability, obviously, the way this works is that you put a view on it and then you discount the future. So what the market feels is that the future earnings will take care of the high PE that currently is, and the growth will be way higher, which will push the PE down in the future periods. So that only time will tell. So in terms of the return on equity, right? So return on equity, for people who don't know or who are not from the finance background, is nothing but the net income by the average shareholder equity. Now, The net income is nothing but profit after tax, and average shareholder equity is defined as the average of equity at the start of the year and at the end of the year. So, so it basically shows that how much the profitability in relation to shareholders' equity, right? So the profitability in the numerator and shareholders' equity in the denominator. Now, Crisil on that aspect is the highest in terms of it's double of what its peers are. So Crisil is sitting at close to 32.3%, whereas ICRA and Care Ratings are sitting at 15.6 and 14.5%, right? ROCE, so we've talked about ROE. In ROCE, in the numerator, you have the earnings before interest and tax. And I'm not a big fan of looking at a metric which has earning before interest and tax, because interest and tax or amortization, in this case obviously there's no amortization because or depreciation, because the nature of the business is such that there's no real machinery or there's no factory where there'll be depreciation. But obviously there will be office assets, there will be real estate they've bought, or any furnitures or whatever they've leased and things like that, so that will undergo depreciation. But the nature of depreciation is such that in businesses like this, it'll have a lower part to play in coming from EBITDA to the profit after tax. So so yeah, the ROC as well. Crisil is standing at double of what ICRA and Care Ratings are. So in terms of FII holdings, so dividend we talked about, cash equivalent, everything, price to earning, price to book. Yeah, price to book. If you look at 15.3, but yeah, the nature of the business, I would not prefer to look at price to book right now. Okay, so if you look at the sales, right, the quarterly sales, for some reason within the comparison, the yearly and the annual numbers, the Crisil is not being populated. So we'll just look at the quarterly sales for now and just try and grasp where the numbers are at for these three companies, and what the volume and size is, and what the operating profit margins and those kind of things are. So in terms of operating profit margins, all three of them are sitting at a similar range. So there may be a case where the operating profit margin is a particular percentage, but the net profit margin may be higher than the operating profit margin because of other incomes associated with it. But this is not the case here, because here, as you can see, the operating profit for Crisil is sitting at 207 crore, but the yeah, that is the case actually. So it's sitting at 207 crore, and the profit after tax will is sitting at 150 crore. So it is going down, and the operating profit margin is in a similar range for all the three companies. So it's hovering in the range of 26 to 31%, right? And in terms of the revenue, if you look at the revenue and to analyze the size of each rating agency and also the growth that each rating agencies are having, you can see that here growth, right? The growth is quite stagnant in terms of 595. For Crisil, I think it's still going up, and you see some lumpiness within the business. So 918, 797, and those kind of things. So up and down. So here as well, you see for some reason Crisil's December numbers are higher, and then it begins to drop, and so there are some cyclicalities that are there, and those would vary according to. So Crisil's obviously non-rating businesses are much more established. Care is looking to increase it from 2% to 40% is what it says. It said that in 2022 as well, but it hasn't been able to successfully do so. And we'll have a look at the future whether they'll be able to rise from the disappointing performance of the non-rating businesses that there has been. So the sales have been 79 crore for the June quarter for Care Ratings, 115 for ICRA, and 797 for Crisil. So Crisil is doing 10 times of what Care is doing in a quarterly basis, and sometimes even more, right? So here, if you see in December, even more than 10 times. But obviously, ICRA and Care are close by, but ICRA is bigger than Care, and Crisil is a dominating factor here. The Crisil is the big daddy of the credit rating agencies. So I'll close my analysis here. Do let me know in the comment section any other pure comparisons that you would want me to do. Also, any individual stocks that you want me to have a look at. Um, I wish you have a lovely day ahead. Thank you and goodbye.